Apart from company fundamentals, other factors play key roles in determining the direction of stock price movements. And these factors include market sentiments as well as news media. So in this video, I want to talk about the role of media and news in shaping market sentiments, the role of media and news in shaping market sentiments. So news and media and news play a crucial role in shaping market sentiment by influencing investors' perceptions and emotions. Actually, depending on the nature of news we receive, these news items tend to have a profound impact on how we make market decisions. Apart from the fact that you're supposed to rely solely on fundamentals, we equally key into whatever the news and media are feeding us, and it tends to influence the way we invest, even as some retail investors. So here is how media and news impact sentiments, because of media and news impact sentiments, and sentiments would invariably impact stock prices. Number one is information dissemination. Information dissemination. News outlets are known to provide timely information on economic events, on company earnings, geopolitical developments, as well as the general financial markets. And so positive news can boost investor confidence, while negative news can create fear, uncertainty, and even panic. And this would eventually drive, drive stock market movements either up or down, depending on the nature of the news and how market participants, on how investors react to these news items. So whether we like it or not, we are influenced by news and even rumors one way or the other. Number two is framing of events. Framing of events. The way media presents information can shape public perception. That's the way the news is presented, the way it is framed can invariably shape the way it shapes how investors perceive such news items. For instance, sensationalized reporting on economic downturns can lead to pessimism, while positive spins on economic recovery can foster optimism. It all depends on how it is presented. It could lead to pessimism, and it can as well generate optimism, depending on how it's presented and how the news items are received. Number three is an influence of social media. We're living in an age where social media tends to dominate different and many spheres of our lives. We can hardly escape the influence of social media nowadays. So how does this particular media influence market sentiments and stock prices in general? So platforms like Twitter and financial blogs amplify market sentiments through real-time discussion and opinion. When experts, sometimes even novice, gather together to discuss, discuss items related to the company we have invested in, discover that this discussion could impact the market, can create a kind of company specific influence or impact that will determine the future trend of the company's stock price. As social media can drive herd behavior, quickly spreading both optimistic and pessimistic views. So usually when people key into news, it generates a kind of heart mentality. And so once the heart is on a mission, it always accomplish its purpose. The crowd is very powerful, whether we like it or not. And so remaining contrarian in the face of what the crowd is doing, it's really challenging. It involves discipline and a high level of self trust. So please subscribe to this channel and like this video. It will help me a lot. Number 4 is analyst opinions and predictions. Analyst opinions and predictions. These are individuals who are vast, who are experts, experienced, skillful, and smart when it comes to investing. And so their opinion actually counts, and their predictions are what cannot be ignored or should be ignored at one's detriment. And so media often features expert opinions and predictions, which can significantly influence investor sentiments. So usually you make reference to the analyst's opinion most of the time. After carrying out your own independent research, you try to see how it correlates with with analyst's opinion. If it is positive, that means you've gotten a very good result. You've done you've done an excellent job, analyzing your company. So bullish predictions can spark buying activity, while bearish forecasts can lead to selling. So when the media often usually media they often focus on, they often feature experts' opinion and analyst prediction. And if it is positive, you discover that the market will pick up. If the general analyst consensus is negative over a particular stock or over the overall market, you discover that it will have a significant impact one way or the other. So we also take into consideration market speculation. So news related to rumors or speculation, such as a potential merger or regulatory changes, can cause sharp market movement based on investor sentiment rather than fundamentals. News like expected merger and acquisition, news that affects the board of a company, news related to new product launch, and all those things relevant, news items. You discover that these things will then certainly, influence the way investors see the company concerned, and would invariably, affect the company share price. Apart from the fact that the fundamentals could be saying a different thing, the fundamental could be saying something different, but it does happen. Because human beings are not rational when it comes to investing. We are humans and we remain humans. Sometimes we are governed by emotions more than on facts, on logic, on reason. Number 6 is economic data and reports. Economic data and reports. So media coverage of key, economic data like GDP growth, inflation, unemployment, and figure can heavily impact sentiments. All these are factors. It's economic data. Reports on them, depending on how it is presented, actually can heavily impact market sentiment. And once market sentiment is impacted heavily, either positively or negatively, you start seeing the result reflecting in stock prices. So positive reports tend to lift investor confidence, while negative ones can have the opposite effect. It could lead to panic, it could lead to fear. In a case it's positive, it might lead to optimism and even euphoria. So in summary, the media and news are powerful forces in shaping market sentiments, affecting how investors feel about current and future market conditions, and as well as some company-specific conditions will then be determined based on inputs from from news media.